One of the first early roadblocks, especially for newer investors just getting their feet wet in the stock market, is not knowing exactly which stocks or ETFs to invest into right from the start. And this should be pretty obvious considering there is hundreds and hundreds of different ETFs across the market, as well as thousands of different individual names. So who in the world, especially starting out, would know exactly where to invest their hard-earned money to have the best chance of getting between, let's say, 10% and 20% returns consistently? So in this video, we're going to be going over 5 very simple yet very powerful ETFs that have offered anywhere from 10 to 20+% every single year since inception. These ETFs are very well diversified and offer investors massive growth potential as well as some income on top of this. Now, especially if you are just getting started in the stock market and you're looking to build out a foundation for your long-term portfolio, you're definitely going to want to stick around until the end. So with that being said, drop a like down below, subscribe, and let's get right into the first ETF. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, like I said earlier, every single one of these ETFs, in my opinion, have the potential to earn investors a consistent 10 to 20% per year in returns, which is outstanding. The first one being the VOO ETF, or the Vanguard S&P 500 ETF, which in my opinion might be one of the best ETFs to start off with if you're just getting your feet wet and building out a portfolio, let's say from scratch. And this is simply because VOO is extremely cheap to hold on to with an expense ratio of just 0.03%. And of course, more obvious, VOO invests in stocks in the S&P 500, which represents 500 of the largest US companies, giving yourself a very high quality yet simple exposure to some of the best companies in the world. Now, as far as performance goes, VOO has performed very well basically over every single time frame, and this is since the inception of this ETF. It's returned anywhere from 20%, almost 40%, but on average anywhere from around 14 to 15% per year, which is outstanding. So because VOO is so well diversified, very cheap to hold on to, and sort of a set it and forget it position, this would definitely be an ETF to look into if you were starting off as a beginner investor. The second ETF I would definitely add to a portfolio if I was just starting out as a brand new investor and I was looking for returns somewhere of around 10 to 20% per year, SCHD, or the Schwab US Large Cap Growth ETF. This ETF is an absolute monster. Now, the objective of this one is the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. And this growth style ETF offers you exposure to large cap names, which historically at least have done very, very well, giving this ETF's performance some of the best I've seen across the entire market. And by buying into SCHD, you're gaining instant exposure to around 230 different holdings. Some of the top things being very familiar names like Nvidia, of course, which makes up over 10% of the ETF as of right now. Then familiar names like Apple, Microsoft, Amazon, Meta, some of the biggest and fastest growing companies across the entire world. So because you're getting exposure to those sort of names, it's probably no secret that this ETF's performance, like I said, has been absolutely magical. We're talking 25% at certain times, 45%, 9%, 20%, 16%. But since inception, we're talking on average around 16%, which is going to turn even a small portfolio into a massive one over the long term. So if you're an investor just getting started off and if you want exposure to large cap growth, SCHG is one of my favorites to talk about. Now, for those investors watching this video saying growth is awesome, but I do want some dividend income also, you're definitely speaking my language personally. But one of the best dividend growth style ETFs you definitely should look into, especially if you're in the early stages of building out a portfolio and you're looking for anywhere from a consistent 10 to 20% return, I personally believe that this ETF has exactly what it takes to do it. I'm talking about SCHD now, the Schwab US Dividend Equity ETF. Now, this ETF's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. This ETF is also, just like the others, very cheap to hold on to, and with a single click of the button, SCHD gives you exposure to some of the best dividend growth single stocks across the entire market. Names like Cisco, names like the Home Depot, and the list goes on and on. And what's cool about this ETF is it's not only grown over time significantly, but also on top of that, this ETF pays you around 3.5% starting yield, somewhere around that range, and also has grown their dividends consistently over the long term. Now, you're probably still wondering what has the actual performance been for this ETF over the long term. Now, year to date, we're talking almost 14-15%, over the 1 year, almost 30, and on average around 13-14%, which once again just proves this ETF, at least historically, has offered between 10 and 20% returns. And in the future, I think this ETF is going to be doing amazing. Now, another ETF that I think is perfect for an investor, especially if they're looking for those 10 to 20% returns, but also for an investor that's a little bit more income focused. Maybe you want your portfolio to grow, but maybe you are sort of more on the side of the road where you want more income potential. Well, this is one of the best ones to ever do it. I'm talking about ticker symbol JEPQ, or the JP Morgan NASDAQ Equity Premium Income ETF, one of my favorite more income focused ETFs, and this is across the entire stock market. Now, what I like about this ETF is that it gives you exposure to the NASDAQ 100, but with less volatility, and this is because of the use of options. Specifically, written out of the money, NASDAQ 100 call options are deployed, which offers investors a lot more income than you would normally get by just getting bare exposure to the NASDAQ. Now, this ETF offers anywhere from around a 9% to 12% yield, depending on where you bought into it, which offers investors a massive amount of income, again, compared to the general markets. Now, as far as performance goes, this ETF, even though it offers a much higher yield than some of the other ETFs we talked about, it is by no means a yield trap. We're talking anywhere from 5% to 17% to 30% gains on all these different time frames, and around 15% on average since inception. So another ETF that's going to offer investors, in my opinion, between 10 to 20% returns long term, and particularly going to be offering investors premium income along the way. Now, last but not least, because keep in mind there's tons of ETFs across the market that can offer investors between 10 to 20% or even more as far as returns consistently. But the last one that I would look into, again, if you were more of an income focused investor and cared a lot more about dividends, distributions, etc., I would look into the NEOS NASDAQ 100 High Income ETF, or ticker symbol QQQI. Now, this ETF is awesome because it offers you, once again, NASDAQ 100 exposure, but by implementing data-driven call options, this ETF is able to distribute a massive amount to investors, at least it has historically. We're talking around 14-15%, which again is so much more, around 8 or 9 times more in income that you'd receive compared to investing into the S&P. And because this ETF strategy, which I've talked about plenty of times in other videos, it even has upside potential, which means even though it's income focused, the ETF can still grow over time because of the unique strategy that they use. Now, the ETF's performance so far, it's only been trading for a short amount of time frame, but anywhere from 12 to 13%, which is not bad whatsoever, especially during the time frame that we're talking about. Now, like I said, this one is of course more income focused, so again, if you're looking for more growth names, definitely skip back towards the beginning of the video because those are probably better options. But if you want some NASDAQ 100 exposure, this is one of my favorites to do it across the market. So those are 5 different simple yet very powerful ETFs that can offer investors between 10 and 20% returns per year, or at least has historically. Now, what's cool about the stock market, especially if you're just getting started in this whole thing, there's a different ETF out there pretty much to match exactly what your personal objective is and then some. What I mean by this is that if you're more of an income focused investor, there's ETFs out there that are going to pay you a little bit more than others. And if you're more growth focused, there's of course ETFs out there like some of the ones we talked about that have the potential to grow your portfolio significantly in a short amount of time. But either way, like I always say, especially for newer investors, building a foundation, building a strong foundation of different high quality ETFs, diversified ETFs at that, and then building on top of that is probably one of the safest ways to build a portfolio for your long-term future. But now lastly, before I go, I do want to hear from you guys down below. As of right now, what's your number one favorite ETF across the entire market? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.